Hi Dave.
Hi Nick.
Welcome to the West Court Masterclass series. This week we're talking about cleaning up your chart of accounts.
Yes, so chart of accounts is your list of accounts that you have in your accounting software that all transactions will flow through to. And this ends up populating important things like your financial reports that you use for banks, your owners use it, shareholders. So it's quite an important list of accounts as per se.
Yeah, it's quite a simple concept, but because it is the basis of every report that you get out of your software, if you get it wrong, then it gets most things wrong.
It gets very messy very quickly, and especially when you're starting out as a small business, it can be quite simple, but when you start to grow, maybe that 5-year, 10-year period, things can start to get bigger and bigger and bigger, and that's where we see a lot of noise. So that's why we want to clean it up, make it easy to read, and be really specific.
Your business grows, it develops, and so should your accounting software with it. What was relevant when you started out is not going to be relevant 5-10 years down the track. So you need to keep reviewing it and need to keep developing that with it, which is super important because, like I said, your financials, they go to the bank, they go to owners, they go to prospective owners, and in some situations that's the only snapshot of the business that they get.
Yep.
So you want it to be nice, you want it to be tidy, you want it to be clean and easy to read.
So one of the tips we have for cleaning up your chart of accounts is be specific. So when we talk about being specific, we're talking about what the transaction or what the account relates to. So if it's sales, that can be quite a generic generic account at the end of the day. You could have, if you're a building company, you could have some residential, you could have some commercial, you could have some maintenance income in there. So it's just breaking it down into what income for that case relates to what account. So if it's sales, it'd be sales residential, and then sales commercial, sales maintenance. That way you can see the specific incomes for each account.
Yeah, and obviously that way you can actually see within your business, what's producing, a solid return, what might be lacking, and if you're specific in all your accounts, all through expenses and cost of sales as well, then you'll actually be able to have a quick glance at, which industry within your business is actually successful and what might need a bit of work or need to be reviewed.
And that flows through also through the family group. So there's a lot of times where we have family business entities that might have 8 entities or 20 entities. So it's about having a snapshot you can see quickly. So if the income is flowing, it's dividends, where are those dividends coming from? So as accountants, we would then want to know, where's that coming from? Is it coming from entity A, entity B, entity C? So, dividends received, Nick Jefferies Corporation, so that way we know it's coming from that entity and we can flow that income through instead of,
Yeah, similarly with loans, you want to know who owes you money, who you owe money. You want to be able to see that, you want to be able to track that, and you don't want to have to go dig into every transaction for the past 20 years to find out who owes what and when and where. So
very messy.
Just keeping it simple with the titles but effective is super important.
Yeah.
And on the flip side of that as well is you want to be specific, but you want to be relevant. So there's no point creating a different income account for every single bit of income you have.
No,
you can sometimes go a bit over the top and you end up having 100 accounts for income and each of them have got $100 each in them, and it's just an absolute nightmare. Your financial statements end up running for about 100 pages, and I can guarantee if you give that to someone at the bank, they'll look at how thick the stack is and probably just throw it in the bin.
That's why we want to see a profit and loss that can be condensed into one page, balance sheet into one page as well. We don't want to see profit and loss with 6 pages because you just get bored quite quickly, to be honest.
Yeah, so be specific but be relevant is the first tip. The
Next tip.
Next one would be just consistency. So, a lot of businesses have a few different entities, or
a few different sites perhaps. So
Yep.
if you're a restaurant, you might have a restaurant in Northbridge, you might have a restaurant in Leederville, South Perth. You don't want to be chopping and changing between different sets of accounts, chart of accounts, because then it's hard to make comparison at the end of the day, like if they're not consistent across the group at the end of the day.
So you want to be able to, you want to do the hard work in setting up your accounts properly first, so that down the track everything's easy. So you can, within a matter of a minute, you'll be able to compare Leederville through to South Perth, and it'll just be a side-by-side comparison. You won't have to start digging around and looking for what and whether that's actually the same sort of income or the same expense. It'll be right there. You'll be able to see it, and when it comes down to selling the business or potentially getting a new buyer on board, some more income into it, that's what you need to just be able to show someone, so they can just see quick and easy that it's all relevant and it's all comparable. We want to be able to track these entities. We want to be able to track the components.
Tracking is important for that consistency, just in terms of having those sites, the programs these days. So Xero, for example, QuickBooks, you'll be able to choose one chart of account. So say that's sales.
Yep.
For food, and then you'll be able to track that between Northbridge and Leederville, South Perth. So you can set up those location branches tracking, but it's just important to have that chart of accounts. The next tip would probably be seek professional help. It's a big important one, especially because it can get very complicated.
It can, because a lot of it seems like your chart of accounts, a lot of it is just labelling the account itself, titling it with the correct heading, something you like, something that's specific, something that's relevant, something that's consistent.
Mm-hmm.
However, within these accounts, you also have things like your GST rates, your tax rates. When it comes to employment, which account you use actually does matter. So setting these up correctly at the start is super important, because it saves having to go back and fix years of errors, and that does lead into what you actually lodge with the ATO as well. So it is super important.
Yeah, it can start to snowball, especially with the GST. If you get that wrong at the start, it might be 12 months before you see your accountant.
Yep.
Or you're doing your BAS, and a big error. If there's $10,000 going each month into that account, and it's incorrectly recorded from GST, you might be missing out on $10,000, possibly $12,000 of cash flow by the end of the year. So
it's also one of those things that what takes an hour to do correctly now, if you do not do it correctly now, it will take weeks in a year or 2 or 3 just to fix that issue.
And it's easy enough to get on the phone to your accountant and just question what you're doing or how you're setting it up, and just getting that sounding board at the end of the day. It's easier to do that than to make those errors and then they snowball, because we all know small leaks sink big ships. So
very true.
And the last tip that we have is tracking numbers is important. So basically, we want to be able to see our earnings, we want to be able to see our expenses in an easy format, because that helps us make those decisions from a business perspective and make real change, in a timely manner. We don't want to be sorting through, reconciling, or just rearranging where things should be. We want to be able to go into an account, drill down, question why it's too high or what's been there, and that will, help the business in the long term.
At the end of the day, it's your business. It's your livelihood most of the time. You're responsible for it, so you want to keep your finger on the pulse of what's happening within your business, and this is step 1 to being able to do so.
So cleaning up your chart of accounts, we want to be specific and relevant,
consistent.
We want to seek professional help, and remember that tracking numbers is important. So they're the 4 tips that we give to cleaning up your chart of accounts and helping you to move forward.
Yeah, obviously quite a broad overview, but you can always drill deeper into this and can spend hours on it. But if you do need help, give us a call. There's no dumb questions, so always happy to help.
Always happy to chat.
Yeah.
Thanks, Nick.
Thanks, Dave.
It's been a pleasure.
See you next time.